Imagine waking up to see the stock market trembling, tech giants holding their breath, and supply chains across the globe bracing for disruption. Again. Just weeks ago, the world's two largest economies, the United States and China, announced a startling 90-day pause in their trade war. Headlines blared, tariffs slashed, rare earth exports flowing, investors cheered, diplomats exhaled, and businesses dared to dream of normalcy. Yet, beneath these hopeful headlines, anxiety simmers. Is this truce merely a bandage on a festering wound? Or could it be the first step toward a new global order or chaos? In the next few minutes, we're peeling back the layers of this fragile ceasefire. We'll expose the real stakes, the hidden levers of power, and the unresolved battles that threaten every product on your desk, every device in your hand, and every job in your city. This isn't just another trade squabble. This is a contest over the future rules of global economics, the control of critical technologies, and the raw materials that power the 21st century. So what really happened in Geneva, and what collision course could the world be on next? To understand the urgency of this moment, we need to rewind. U.S.-China trade relations have always swung between uneasy friendship and open rivalry. After China's entry into the World Trade Organization in 2001, American consumers rejoiced at a tidal wave of affordable products, from smartphones to sneakers. But while store shelves filled, thousands of U.S. factories shuttered. Blue-collar families from Detroit to Des Moines saw their livelihoods vanish, fueling a populist backlash that would shape the politics of the next 2 decades. By 2018, these simmering feelings erupted. President Donald Trump threw down the gauntlet, massive tariffs on hundreds of billions of Chinese goods, accusing Beijing of unfair trade, theft of intellectual property, and currency manipulation. China counterpunched, hard. Tariffs, export restrictions, state media stoking nationalist fervor. The world braced as supply chains splintered and multinationals weighed exit strategies. The global economy wobbled. Both sides circled, neither willing to blink first. Then came the so-called Phase 1 agreement in early 2020. It promised relief, but scratched the surface and fundamental grievances remained. Forced technology transfer, market access barriers, subsidies for state-owned enterprises. 2 years later, the COVID-19 pandemic layered fresh uncertainty on top of already strained trust. And now, just when it seemed the escalation might spiral out of control, Geneva delivered a temporary reprieve. On May 8th, diplomats from the United States and China, fresh off deals with the UK and Europe, unveiled what they called a constructive agreement. Gone were the punishing 125% tariffs that had rocked markets since April. Instead, a 90-day window. Tariffs slashed to 10%, but only temporarily. China, for its part, agreed to scrap export restrictions on rare earths and other sensitive goods for the same period. But make no mistake, this is not a peace treaty. The U.S. still clings to 20% tariffs tied to fentanyl issues, along with older duties on steel, aluminum, autos, and more. The echo of trade war remains, humming just beneath the surface. Scott Bessent, U.S. Treasury Secretary, tried to strike an optimistic note. The consensus from both delegations is neither side wants to be decoupled, and what have occurred with these very high tariffs was an equivalent of an embargo, and neither side wants that. But listen closely, and the nervous energy is unmistakable. Businesses aren't popping champagne just yet. As Alex Hsu of Georgia Tech puts it, the 90-day pause only prolongs the trade instability. Businesses are still in a holding pattern until a more definitive resolution is reached. Why is everyone so on edge? Because the biggest issues haven't gone away, they've just gone silent. Let's break down the levers of power fueling this standoff and why the world's factories, classrooms, and boardrooms are glued to the news. Start with rare earth minerals, the invisible backbone of modern civilization. These 17 obscure elements are crucial for everything from smartphones and electric vehicle motors to military radar and wind turbines. China controls over 80% of global supply. When Beijing imposed export controls last year, Ford was forced to temporarily shut down its flagship Chicago factory, unable to source the specialized magnets it needed. It was a quiet warning: mess with us, and your economy grinds to a halt. The U.S. is scrambling to diversify, but new mines take years, and alternatives are expensive. Meanwhile, China has shown it can weaponize its dominance at any moment. Next, technology. The U.S. remains the world's AI and semiconductor powerhouse, but Chinese firms are catching up fast. Washington has imposed strict controls on exports of advanced chips and tools. American officials warn that AI-enabled surveillance and next-generation weapons could tip the balance of global power. In response, Beijing has poured billions into its own tech giants, from Huawei to SMIC, determined to break free of U.S. chokeholds. The world watches anxiously, knowing whoever wins this race will shape the digital future. Add to that visa crackdowns. The U.S. now severely restricts Chinese students from studying advanced engineering and computer science, citing national security concerns and fears of espionage. Secretary of State Marco Rubio is blunt. We must defend American innovation, period. Critics warn this could choke off the talent pipelines that made Silicon Valley what it is. But others say the risk is too great. Currency manipulation remains a constant accusation. American officials maintain that China keeps the yuan artificially low to boost exports and sap U.S. manufacturing. Beijing denies any wrongdoing. Even at the World Trade Organization, the two giants remain deadlocked, each side blaming the other for abusing the rules. Complaints pile up, mediation stalls. All told, the current truce is full of caveats and ticking clocks. The new U.S. executive order drops most tariffs to 10% for 90 days, except for critical fentanyl-related goods, which keep tariffs at 20%. China opens its rare earth spigots, but only for now. A communication mechanism promises further talks, perhaps even a direct call between President Trump and President Xi. Yet concrete steps remain elusive. Dan Ives of Wedbush Securities called the temporary suspension the best-case scenario from the weekend talks. But as former CIA China analyst Christopher Johnson warns, with both sides wanting to retain and continue demonstrating the potency of their respective chokehold capabilities, the risk the ceasefire could unravel even within the 90-day pause is omnipresent. The world's supply chains are in a dangerous limbo. Companies from auto giants to smartphone makers are desperately figuring out backups. Some are de-risking, shifting production to Vietnam, Mexico, or India. Others hedge their bets, waiting to see if the truce holds or collapses. Tibor Besidis, also at Georgia Tech, sees a bigger threat. Countries are starting to look for alternative trading partners. If the U.S. is not careful, it could lose its influence in global trade. And, as Inu Manak from the Council on Foreign Relations cautions, these tariffs may not even be working. These tariffs largely fail to divert trade away from China in a global economy. In other words, the old playbook may not fit today's interconnected world. Policymakers are walking a tightrope. On one side, voters and workers, demanding protection from what they see as unfair Chinese competition. On the other, multinational businesses, terrified of supply shocks and lost markets. In the middle, a web of global dependencies, from minerals to code to talent. Even among experts, there's no consensus on what happens when the clock runs out in 90 days. 3 scenarios loom. Drift. The world slides into a slow-motion economic Cold War, with constant friction and no resolution. That means tariffs go back up, supply chains stay unpredictable, and business confidence withers. Fragile truce. Temporary deals and political theater continue, but the underlying mistrust and policy weapons never really go away. This may feel stable, but it's a powder keg, waiting for the next spark. Cooperative engagement, the least likely outcome. The U.S. and China agree to lower barriers, prioritize economic stability, and share the fruits of globalization. Multinationals breathe easy. But given the political climate, few expect such a breakthrough. So, as the countdown begins, one question eclipses all others. Are we on the edge of a breakthrough, or the brink of a new global split? As the days tick by, every headline, every press release, every diplomatic phone call could tip the world's economic scales. What's really at stake in these negotiations, and who stands to win or lose if the fragile truce shatters? The tension is mounting, and the next move could rewrite the rules of global business. As the world holds its breath over this 90-day trade ceasefire, 3 starkly different futures glimmer on the horizon. Will this pause become a bridge to lasting peace, a countdown to deeper conflict, or just another chapter in an endless cycle of uncertainty? Decoding the next moves between Washington and Beijing isn't just a matter for diplomats. It's something that could reshape everything from the price of your next smartphone to the security of the global economy. Let's dive into the most likely scenarios and their potential consequences. First, the scenario experts call drift. The 90-day pause expires, negotiations stall, and the two giants slip back into their old patterns of rivalry. Tariffs that were temporarily lowered snap back into place, or even rise further. Markets swing wildly with every new headline about steel or tech, and supply chains groan under the uncertainty. The World Trade Organization, already struggling to enforce order, becomes a stage for endless legal wrangling. Conflict simmers beneath the surface. As Professor Alex Shu of Georgia Tech says, the 90-day pause only prolongs the trade instability. Businesses are still in a holding pattern until a more definitive resolution is reached. For ordinary people, this scenario means more price shocks. The cost of electronics, cars, and even household appliances could rise, and companies may pass these costs right down the line. Employers may hesitate to hire or expand, worried about what comes next. And for nations caught between the US and China, the pressure to pick sides grows relentless. The global economy fragments into rival camps, each with its own rules, standards, and technologies. If the US is not careful, it could lose its influence in global trade, warns Tibor Besedesh, another trade expert. Second, we might see a fragile truce, neither full-scale cooperation nor all-out conflict, but a tense equilibrium. Here, Washington and Beijing keep talking, reaching temporary deals when crises loom, but never resolving the roots of their rivalry. Tariffs dip, then spike. The tech Cold War grinds on, as the US continues to block China from cutting-edge semiconductors, and Beijing flexes its rare earth muscle when it suits its interests. Critical sectors, automobiles, electronics, pharmaceuticals, juggle supply chain disruptions anytime relations cool. This is the path most experts expect. It's a world where companies keep contingency plans at the ready, stockpiling parts, scouting new suppliers in Vietnam or Mexico, and hoping they won't be caught in the crossfire. The cost of this uncertainty? Billions in lost investment, delayed projects, and vanishing opportunities for real global cooperation. As ex-CIA China analyst Christopher Johnson notes, the risk the ceasefire could unravel even within the 90-day pause is omnipresent. Third, and least likely, is cooperative engagement. Both sides step back from the brink, recognizing that mutual prosperity beats mutual pain. They start to unwind tariffs, ease up on tech restrictions, and focus on joint investment. The U.S. invites more Chinese students and researchers in good faith, while China assures a fairer playing field for foreign firms. Supply chains stabilize, innovation flourishes, and other nations breathe a collective sigh of relief. Though some policymakers and business leaders dream of this outcome, deep structural tensions and domestic political pressures on both sides make it a distant hope. But never say never. History has thrown bigger surprises before. So what's most probable? According to the latest research and a chorus of industry voices, a fragile truce looks like the new normal. Expect talks to grind on, punctuated by drama and threats, as both sides jockey for advantage. Each temporary deal will bring a brief chill to tensions, only for the underlying competition to flare up again. Meanwhile, the world will adapt, but the cost of uncertainty isn't going away anytime soon. But let's not stop at the big picture. What do these high-stakes negotiations and policy chess games mean for you right now? How does understanding this trade truce help you make real-world decisions? First, if you're a consumer, brace for volatility. Pay close attention to news about tariffs and supply chain disruptions, especially if you're planning big purchases like electronics or cars. Sudden changes in policy can mean price hikes, product shortages, or surprise Made in Vietnam labels replacing Made in China. In an era of shifting alliances and supplier networks, being an informed shopper is your best defense against shocks at the checkout. If you work in business or manufacturing, don't bank on a quick fix. This is a moment to diversify suppliers, build flexibility into your operations, and watch both legal and political developments closely. As we've seen with Ford's factory closure over a rare earth shortage, single points of failure can bring even the giants to a standstill. It pays to map your supply chain, not just one step, but 2 or 3 deep. Ask tough questions. Where do the critical parts really come from? How fast could you pivot if the rules change? And what about career planning? For students and young professionals, the US-China standoff is reshaping the landscape. Tech, logistics, international law, and trade policy are all hot fields, especially for those who can bridge cultures and understand the nuances on both sides. If your interests lean towards science, engineering, or public policy, now's the time to develop a global perspective. Follow the signals coming from Washington and Beijing closely. Changes in visa policy alone can open or close entire career paths overnight. Even if you're not a business leader or a policy wonk, this trade saga still touches your life. Geopolitical tensions have a way of surfacing where you least expect, in the price of fuel, in the selection at your local store, in what your favorite app can or can't do, in the way your pension fund invests. The world is changing, and those who adapt, both as individuals and organizations, will come out ahead. So what lessons can we take away from this fragile truce? First, resilience is everything. Whether you're a company or a consumer, flexibility is your shield. Don't assume today's rules will last. Explore alternatives, build options, and stay informed. Trade policy might seem remote, but its impacts land close to home. Second, never underestimate the power of information. As Secretary Scott Bessent put it, neither side wants to be decoupled. What have occurred with these very high tariffs was an equivalent of an embargo, and neither side wants that. This tells us that, behind the rhetoric, both America and China are searching for ways to stay in the game. Watching for nuanced shifts, like new tariffs, student visa rules, or product sourcing changes, can give you an edge, whether you're considering a new job, making a big investment, or just trying to understand why prices are spiking at the grocery store. And third, remember that every great rivalry brings opportunities. As the US and China tussle, other nations, Vietnam, India, Mexico, even Brazil, are stepping up as alternative hubs for manufacturing, tech, and investment. For workers, entrepreneurs, and investors, these shifting currents can mean new markets and new partnerships. Some takeaways. Stay alert to the news. Policy shifts move fast. What's true this quarter could be overturned next. Think global, act local. Diversify your plans, whether that's your consumer habits, your investments, or your professional development. Prepare for price swings. Stock up smartly on essentials or plan big purchases with possible tariffs in mind. Don't be afraid to pivot. Change, even if forced by global events, can open surprising doors. Now, as we draw the threads together, let's revisit that central question. Will this ceasefire lead to breakthrough cooperation, renewed conflict, or permanent instability? The truth is, as of now, the most likely answer is permanent, fragile instability. The 90-day pause buys both sides time, but not certainty. The deep technological, strategic, and ideological divides between Washington and Beijing aren't going away in a single season, or even a single year. Instead, we'll likely see a rolling series of truces and tensions, as both sides seek to reap the benefits of global trade while hedging against each other's ambitions. There's an irony here. The very uncertainty that governments and companies fear most may, in the long run, drive the world's supply chains to become more flexible, more resilient, and less dependent on any single country. Already, the long shadow of the trade war is pushing manufacturers to explore new regions, investors to consider alternative markets, and students to seek truly global skills. In the end, the new era of competitive coexistence may end up strengthening the world economy's immune system, even as it injects a dose of constant anxiety. And just between us, here's a little-known fact. While rare earths are often touted as China's ace in the hole, research by the U.S. Geological Survey shows that significant untapped deposits exist in the United States, Australia, and even parts of Africa. The real bottleneck? Not geology, but the political and environmental hurdles to opening new mines and refineries. As the trade war drags on, the race is on, not just to secure resources, but to innovate around them. So, what can you do? Stay engaged. Don't tune out trade news as background noise. It shapes your daily reality. If you're in business, keep scanning for new suppliers and fresh opportunities. If you're a student or job seeker, sharpen those cross-cultural and tech-savvy skills. If you're just a consumer, watch those price tags and consider where your goods really come from and how quickly that might change. Above all, adapt and learn. The age of easy, stable globalization may be over, but a new world of possibilities is just beginning to unfold. Those who watch the tides and move with them will be the ones who thrive. If you found this deep dive into the US-China trade truce helpful, don't forget to subscribe to our channel, hit the like button, and share your thoughts below. What would you do if the trade war heats up again? How has it touched your own life? Let us know in